Hey everyone, Elliott here. Welcome to week 6, module 6. Now, this week is very important because we're going to be covering the 3 valuation approaches: the income approach, market approach, and the asset approach. So let me share my screen. All right, the income approach. Now, this is the only one that you're going to be calculating in the model and your report. You'll be discussing them in the others in your report, but you won't actually be calculating those. So within the income approach, you can either use use cash flows or net income or some adjusted form of net income. And you either project those cash flows or net income and discount them to present value, or you look at historical net income or cash flows and then you capitalize those. We'll be looking at projected cash flows and discounting those to present value. Now, the market approach. Essentially with the market approach, you're looking at either a transaction, another purchase of another company that's similar, or you're going to be looking at publicly traded companies that are similar, and there's market data for those. So there are companies out there that have they publish this data. They publish private transaction data, transactions of private companies, and you can use multiples of those companies and extrapolate those and apply them to whatever company it is that you're valuing, and that would be the value based on the market approach. And the market value using publicly traded companies is called the guideline public company approach, and if you're using the transactions, it's called the guideline transaction approach. Now, lastly, the asset approach. This is not used very frequently. It's really most often used for real estate holding companies that generate most of their revenue strictly based on the assets. Whereas most other companies, it's based on cash flows that are generated from products or services, either a product that the company sells or a service that a company is delivering. So won't really talk about that a whole lot, but the two components within that is you can either look at the cost basis, which is usually inaccurate unless fair market values were just recently recorded, or the fair market value. And in fair market value within the asset approach, you mark to market, or you mark your assets or liabilities to the market value, either increase or decrease, whatever the case may be. So this week, make sure that you read chapters 11 and 12, complete the post in the discussion board, and then there's also a quiz, and I will be posting a quiz help guide that will hopefully help you get through the quiz and make 100%. As always, guys, let me know if you have a question. I'm always happy to help.